The 2025 housing market is shaping up to be anything but predictable. With shifting trends, the surprising forecast, your next real estate move could be your biggest opportunity, or it could be your biggest mistake. So what's really happening, and how can you stay ahead of the curve? What's up, guys? Anthony Esposito with eXp Realty, your local real estate expert right here in Cleveland, Ohio area. And if you're one of those people that are looking to buy, sell, or invest in 2025, I'd love to help you out. I have people just like you contacting me every single week to get answers to their complex questions and to find out what is the step-by-step process in navigating the market. Contact me directly here or use one of the methods I have listed in the description below. And if you get any value from the video, be sure to click subscribe and turn notifications on so you can stay up to date on my further real estate videos I have coming your way. So let's find out exactly what 2025 is about to bring us and how you can be prepared for it. Let's start off with these mortgage rates. Right now, they're around upper sixes, low sevens, and it's just kind of been lingering right there. Well, the experts are predicting that through 2025, where we stand now, this can change in a blink of an eye, but where we stand right now, it's not really gonna budge. I'm sorry. They are projecting that there's going to be a slow decrease coming through, and they're talking around 6 to low 6s by the end of 2025. And it's still a crucial factor for anybody that's looking to buy, anybody that's looking to sell. However, this is a normal that they are also saying we need to get used to. The 2.5%, the 2.6s, the 3% interest rates, those were because of the pandemic, a major global situation that essentially caused chaos. And that was a once in a lifetime kind of scenario for the majority of us. It can happen again, but the chances are unlikely. So they're telling us to be prepared for 5-6% at a normal interest rate. So we're not really budging, and it's just the nature of the beast. However, with those mortgage rates, be sure to check with the lenders and different mortgage companies because there are so many incentive programs that they have. There's ones that are offering a 1% down payment. There's ones that are offering closing cost assistance. They are doing so much, whatever they can and whatever their power is given to try to help you purchase a house because let's face it, these housing prices, it's expensive. And that's just the housing price. Now you factor in everyday life, and that is also expensive as well. So the buying power is extremely tight where it's at. So if you can get help wherever you can get it, take it. That's why I suggest for mortgage rates, if you're shopping around for them, speak to at least 3 different lenders, which is 3 different mortgage companies, and see what incentives they're gonna give you and how they could help you out the absolute best. And speaking of those home prices, well, there's only been a couple years that they were negative over the past 50 years, roughly. And this next year, it's not going to be a negative. We are actually going to normalize in the rate, the percentage of the home price growth pre-pandemic, because obviously that exploded, and now here we are in a very expensive housing situation. But they are projecting a 3 to 4% home price growth for the year of 2025, which is pre-pandemic numbers. That is a normal kind of situation. However, for buyers and sellers, it's still going to cause problems essentially, because we are going to see the home price increase. It's not going to be a quick jump. It's not going to be something that's overnight, but we are going to see that increase throughout the whole year, which just means it's going to be more expensive to buy a house. Now, for the selling side of things, obviously, that's going to keep you in good shape as far as selling your home. But just keep in mind that we are currently in a decline. In my market and many other markets, there is a decline of home price. But this is a overall number that they are going to end up looking into, not, market by market. It's national that they are looking into it. So your market may see negative for the whole year. So it really depends on where you're at and how everything is going in particular to your area. But overall, 3 to 4% growth for the home values. So it's just going to increase and keep getting higher. So if you're one of those people that have been waiting for this huge crash to happen, it's not projected to happen at all. So I just got to say, if you want to keep waiting and you're thinking it's going to happen, that's perfectly fine. But it's not happening in 2025 unless something major occurs and obviously changes our whole world as we know it, essentially. Now, with inventory levels, this is going to be good news for the buyers. They are projecting a 11% increase on the inventory levels, which is awesome. We want to see around 5 months, 6 months of inventory, only because that gives a lot of negotiation power and it just gives more opportunity. Right now in this area, we are creeping up towards 2.5 months of inventory. So there's going to be a slight uptick in that as far as it goes. But the downside is that they're seeing it's mostly going to be new construction, which means higher home prices because it does cost more money to build a brand new house than it does to buy an existing house as itself. And you may ask me wait a minute, Anthony, I'm seeing signs for brand new homes starting at $400,000. That's the smallest home, the base model home, no upgrades from their standard package, and does not include the lot. So a brand new home on average in my area is around $500,000 minimum is the average that we're seeing right now. Now, again, $500,000 here in Northeast Ohio, that is probably the equivalent to $1.5 million or $2 million in California. I'm just throwing numbers out there. I didn't actually do the math, but $500,000 here in Northeast Ohio is a lot of money for a house, and you could typically get a pretty big house, existing home for $500,000 compared to a brand new home where it might only be 1,800 square feet and you're paying that same amount of money. So it is cheaper to buy an existing home. That's the downside to the inventory levels is it's projected to be all new construction, which comes with that higher price tag. However, if you are remotely close to the budget of new construction, or you're thinking that you're remotely close to it, it doesn't hurt to ask the builders what's going on because they have some amazing incentives themselves. And one of them is lower interest rates, whether it's on the brand new build or if it is a chain builder in our area that has spec homes. The spec homes are typically running a couple percentages less for a fixed rate. Now, when we're talking on a national level with the regional variations that are out there, as of right now, the Sun Belt area, Texas, Florida area, that is projected to grow substantially because of the popularity behind them. People moving there and just the areas in natural with the cost of living that comes with it, especially with Texas because their cost of living isn't too crazy. Now, other areas where the cost of living is extremely high, like New York, California, I know Seattle area can get expensive. Those higher cost of living areas, they're going to see, according to the projection, a leveled off job growth, and they're actually projecting to see a decline with the housing market just because everything is kind of going to be at a standstill. So they're not expecting the markets to really blow up and go crazy. Now, it's not just state by state. It is going to be city by city. So, there may be areas that are in Texas, some of the bigger cities in Texas that aren't going to see the same kind of market and the same kind of growth as other areas in Texas, or like places here in Ohio. The Cleveland area is going to be different than Columbus, than Cincinnati. I'm just naming the 3 big cities in our area that, is pretty much Ohio. We don't have, too many huge metropolitan areas, but every area is going to be completely different. So just be prepared. If you're one of those people that are in a higher cost of living area, your housing market is projected to kind of hold off and stay the same and not really grow as far as in the advantages of having more homes to choose from and more buying power and all the good stuff that comes with it. Now, with all the buyers that are going to be hitting the market in 2025, they are looking at millennials such as myself, and Gen Zers are going to be the biggest demand that is out there. There's a good chunk of Gen Zers that are going to be first-time homeowners, which there's tons of incentives that are out there. And then the millennials like me, a lot of us are going to be stepping up and getting into a bigger home because we're just simply running out of space. I personally am one of those that's running out of space. So I would love to be able to get a bigger house and have a little more room underneath me, but we'll see how the year goes for me. But that is the big buying pool that they are going to see the majority hit the market in 2025. But again, check with the different mortgage companies that are out there and see what incentives are actually going on when you decide to enter the market. Now, the only caveat to that is that it is going to be more, or I should say less affordable going into it. So some of the more popular areas that are going to see a lot of these Gen Zers is going to be, not so much the suburban areas. It's going to be the cheaper suburban areas. Maybe places that are in my area like Parma, Middleburg Heights, the places that are a little bit closer towards the major cities that are going to bring down, like the lower cost of living area, the lower home price area, more starter home areas. That's going to be a lot of the Gen Zers. And then for millennials, it's really hit or miss. Some of us are well off. Some of us are just getting started. It just really depends. Everybody's situation is different. Now, if you are an investor or you want to become an investor, rent is going to have a slight decrease, but it's going to be pretty stagnant on where it stands. So the cost of rent is not projected to really budge, just a small minimal decrease, nothing crazy, but it's also not going to increase in price, which is good if you're somebody who still needs to rent and maybe you just cannot get into a house just yet. But if you are looking to invest, the opportunities are still going to be really strong for you. And even if you want to look into flipping a home, some of these areas that are increasing in inventory, but the demand is staying the same, those homes are going to be sitting a little bit longer, which may give you a little bit more negotiation. And granted, I know you want to make, pretty good amount of money when you flip a home, but some of these, you do minimal effort to them and you could turn around and really spruce things up. So the opportunities are still in favor if you are either an investor or looking to invest into having a rental or flipping a home. And now we do have, obviously, a new administration coming in. So depending on the government policies that are going to be put into effect, which way it's going to go, I'm not here to argue politics. Whatever way you want to be, that's perfectly fine. But whatever gets implemented, that could have a big impact on the market and the activity that goes with the market. They have their first-time home buyer assistant programs. Depending on what happens with those, taxes, that could all influence the market in a different way. So I really just wanted to bring it up and just make a note of it with the new administration that's coming in, depending on what happens, what changes. Again, all this stuff all these predictions, that's all they are, is just predictions. But they're pretty accurate for the most part, as long as there's not anything crazy that ends up happening. But we'll see what government policies that they bring out and what they implement to help with the housing market. And then just keep in mind, with the uncertainty of the economy, with what's going to happen with inflation, what is the mortgage rates actually going to do? What's going to happen in the world? We're very unstable in the world as far as, the potential for a war breaking out. This can all change stuff. So just whether you're buying or you're selling, you do have to keep an eye on the economy and plan accordingly to what's going to happen. We can't predict the future, but when you are ready to buy or sell, or kind of the timeline of where you're looking to buy or sell, just take into account of where the economy is currently. Don't try to play with future insight, because again, all of this stuff can literally change in a blink of an eye. So with the predictions that are out there with 2025, let me know in the comments down below how you feel about it, and what is your approach? Is it a want or is it a need to buy, sell, invest? What are you looking to do? I'd love to help you out. Like I have many others that are contacting me every single week with navigating this market and just getting answers to their questions. Contact me directly here. I'd love to help you out as well. If you got any value out of this, be sure to smash the like button. It's greatly appreciated. And if you haven't already, click subscribe, turn notifications on. This way you can stay up to date on my future real estate videos that I have coming your way.